you might be thinking this would be great of subjecting all of his money to RMDs. Most of us are not in that position, are trying to figure out how to cover your RMDs. Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. I'm sitting here on a log and I wanted to talk to you about one of my clients. He's looking to kill two birds with one stone, basically. He wants lifetime income, but he also has RMDs in the amount of $80,000 plus per year. And so he really wants to get the income, but he also wants to cover the RMDs for at least half of his account. So he's actually going to use 30% of his assets, okay? 30%, and he's going to generate $41,000 per year in guaranteed income for the rest of his life. He's 78. He's going to generate $41,000, which is going to generate enough to cover half of his RMDs. So he's going to still have to take $40,000 out a year from his stock account, but he wants to be able to have the stock so he can continue to grow his asset base and still at the same time get some income from his annuity. So he's taking $450,000 and he's going to generate this income for the rest of his life. Now, granted, he is 78, and so when you're older, you don't have to use as much premium to generate the amount of income that you like for yourself. And so for him, in this particular instance, he's able to not use very much of his portfolio to generate the income that he needs. And he's going to do that, and then he's going to use the rest of his portfolio to grow. He's going to satisfy the other half of his RMDs from his portfolio, and this just allows him to have a little bit more benefit from his money instead of having all of it exposed to market risk. And sometimes I have people that will put all of their qualified assets into annuities, and they'll leave their non-qualified, their cash, in the stock market to grow, or maybe their Roth account. So that's always a strategy that people like, especially since Roth accounts are not subject to RMDs. Then a lot of times those are great accounts to grow in the stock market tax-free and not be subject to RMDs and be able to allow those to grow for as long as you want. It's a great strategy to use that. Also, as far as cash, you can use cash as well. Most of us are not in that position. Most retirees, they've got about, I would say 80% of the retirees nationally have money in tax-deferred money. Okay, it's not in Roth. So there are some in Roth, and I'm helping people with those, and they are converting those. Even after buying annuities, there are certain ones that will allow you to partially convert those. If you want to spread it out over 4 or 5 or 6 or 10 years, you can do that. But for his given situation, he's like, look, I'm 78. I want to have lots of lifetime income, and I want to use just a third of my money to do it. And so that way I can get lifetime income. I can get the RMDs, at least half of them covered. So that allows him to grow his other money more instead of subjecting all of his money to RMDs. He's really in a good spot being able to do that. So the reason why I want to share that is because you're probably thinking, many of you who are watching this channel are trying to figure out how to cover your RMDs and not run out of money. And you can do that with annuity contracts, okay? You can put all of your money, all of your qualified money into annuity contracts if you just want to cover RMDs and make sure you get as much guaranteed income as you want. And then you can leave the rest of your money. If you got cash sitting in a brokerage account, you can let that sit and grow. Or maybe you want to have half of it in tax-deferred money that you plan on converting to a Roth later on. That's always a strategy as well. Another thing I want to talk about with this type of money, when you've got tax-deferred money, okay? If you got tax-deferred money from your IRA or your 401k going into an annuity contract, okay, you've got, this is going into an IRA, it's got an annuity sitting inside of there, and that annuity is providing you lifetime income. The thing with lifetime income annuities is the account balance does not last, okay? So for instance, he's gonna have $41,000 coming out a year for the rest of his life from this contract, okay? The money in this contract will probably be gone in like 10 to 12, maybe 15 years at the most. It'll be gone. But the income that continues, it is still coming out of that IRA bucket. And because it's coming out of the IRA bucket, it is still covering RMDs. And so maybe he might get to the point where he doesn't have to pay RMDs at all out of his other account because his income from this IRA, which is now empty, is still covering the RMDs for the rest of his qualified money. So obviously he's 78, in 12 years, he's gonna be 90. So you might be thinking, well, that's a little, that's kind of far-fetched. Maybe he won't live that long, and maybe he won't. But for many of you who are in your 50s and maybe early 60s, you might be thinking this would be great because you're going to have something that takes care of your RMDs. And as that account value goes down, then that account value that's going down will not require as much RMD, which means those RMDs that are coming out of there for lifetime income will then cover the RMD requirement from your other qualified accounts. Anyway, something to think about, but it can be a very, very effective strategy. So if you're looking for lifetime income and you're looking for an annuity that pays out the most, then I would invite you to go to my website, johnstevenson.com, check out my annuity calculators. The income rider typically pays the most. You can check out the SPIA and DIA contracts, the QLACs as well. I sell lots of MYGAs. Those are the fixed rate annuities, but I show everything. I guess that's the point I wanted to get across is I do show everything. And whenever you're ready, I invite you to check that out. Then book a call with me if you're ready and you like my help purchasing an annuity. I'd love to help. So there is a link below this video as well. If you want to go on my calendar, you can certainly do that. And I'll send you the link for the Zoom meeting as well. Anyways, hope you enjoy this view. I enjoy being out here. I enjoy being even though it is cold, it's in the winter time, I was able to find some spots that didn't have any snow. It's nice to be able to do that every once in a while and come out here and kind of share stories, real world stories of what my clients are doing right now to generate income and provide some guaranteed income and peace of mind for their retirement. So anyways, I appreciate you watching. If you like the video, make sure you like, subscribe, share, comment below if you got questions, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.